Return on investment is a return value invested and calculated in percentage. The formula is total return over value of initial investment multiplies with 100%. If the return is more than the initial investment, it reflects the profit, or if it is in the opposite, it is a loss of investment. Investment instruments include real estate, unit trusts, and shares. Real estate refers to properties like house, land, and commercial lot. Each of these will bring returns. Okay, let's calculate return on investment for real estate. Let's say in year 2002, I bought a house for 300,000 ringgit and I paid 10% down payment. 10% of 300,000, which is equals to 30,000, and the loan amortized to the bank is 475,000 ringgit. And after 20 years, I sold the house for 600,000 ringgit, so double of the original price. So in the sales and purchase agreement, I need to pay for the stamp duty, legal fees, and also agent's commission. And through these 20 years, I have earned some rental fee, which is 60,000. Let's calculate the return on investment. Return on investment is the rent plus with capital gain. So the rent is 60,000. The capital gain is 600,000 minus of everything that need to pay off. So minus of 30,000, the down payment, and minus of the loan still all to the bank 475,000, and stamp duty, legal fees, and also agent's commission. And I still have another 59,200, that is the capital gain. So you can see the house double the price, but I have only gained for 59,000 after minus of everything. And the return on investment is equal to 119,200 ringgit, and need to calculate based on a percentage, and this is equals to the return on investment amount over the original amount of the house, original price of the house 300,000 times with 100%, and it is 39.73%. So for after 20 years, I can earn a return of 39.73%. The return on investment for unit trust is a little bit different from the property, from just now the real estate, because you gain dividend. So this is an example, Amanah Saham Bumi Putra, the unit trust. So in year 2021, so I bought 4,000 units with 2 ringgit per unit, and at the end of the year we'll get a dividend of 5%. And for the next year, I sold all the 4,000 units for 2 ringgit 30 cents per unit. And the initial amount that invested is 4,000 unit multiplied with 2 ringgit, which is equals to 8,000 ringgit. And the dividend is 5% of the 8,000 ringgit, which is equals to 5%, can write it as fraction, so that you can simplify it, and the dividend get is 400 ringgit. So the capital gain is increase in share price. So original 2 ringgit and now is 2 ringgit 30 cent times with the total unit. So the increase in share price is the 30 cents difference, but with the 4,000 units, so times with 4,000, which is equals to 1,200. The total return will be the dividend added with capital gain. So this is everything that I get. So it is equals to 1,600 ringgit. The return on investment, so the return is 1,600 over the initial capital, the amount that I invested, so multiplies with 100%. This is equals to 20%. So after a year, can gain 20% of return, which is considered quite good.